Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. His website, wealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, Esther in Ontario asks, according to one Toronto financial advisor, condo prices and homes in general are going up in price this year. Does Ross agree with that?
Jim, what's it, Tuesday? Monday, the Toronto Real Estate Board in Ontario here, they held back their press release, which normally is would have been released on Friday, gave themselves the whole weekend. At the same time, they were preparing a report for this coming year. And the setup that has gone on between the real estate board across Canada right now is something to behold. For someone like me who had fought, 3 generations of our family to make the realtor brand an honorable profession in Canada, it is really disgusting what I've watched happen over the last week. Just as I'm waiting to do the show today, Jim, for the first time in history. So let your listeners understand that. Never before in the history of organized real estate has the Ontario Real Estate Association released a set of monthly housing data for the province of Ontario. Unlike British Columbia, where BCREA has released it for, a decade or so, or a couple decades maybe, Ontario Real Estate Association has never ever released a report. Yet as I'm sitting here to doing the show, all of a sudden, the Canadian Real Estate Association puts out a report with the OREA, Ontario Real Estate Association, brand on it for the province of Ontario. So I can understand where the financial advisor this listener is talking to, why the press, why all the public believes what they're believing. Like I can see it in real time here, Jim. Are condo prices in homes in the Toronto area increasing right now? No, they're not. Is house price illusion increasing? Yes. Does the general public believe what the Toronto Real Estate Board reported yesterday, what the Ontario Real Estate Association, for the very first time in history, in other words, they have never produced a monthly housing stats like the British Columbia Real Estate Association does? Do they believe it? Yes. They don't understand that the Ontario Real Estate Association has never been given access to the real estate stats from each of the real estate boards in Ontario. They have never been authorized, given permission by those real estate boards to produce a report in Ontario like the one they just produced in British Columbia. And even till today, OREA, the Ontario Real Estate Association, is not issuing this report. It's the Canadian Real Estate Association issuing it for them, because there are still real estate boards in Ontario who refuse to allow the Ontario Real Estate Association to talk about them. When I read this report, when I read this, what I was giving here today, I can see why the public is so confused. Yesterday, I read headlines by the Toronto Star, okay? So, I think it was in around 2015, I can't really remember. I'd have to go back and check my emails, Jim. Susan Pegg was the housing long time housing reporter for the Toronto Star. I showed Susan Pegg how organized real estate was manipulating her, how they were getting her to publish false reports in the Toronto Star. This went back and forth with her several times. Now, of course, she's always asking me, I need your data to prove it. She doesn't need data from the real estate associations. She never had data in all of her years of reporting for real estate associations. But, oh, no, she wants my data to disprove theirs. Yeah, right, I'm going to give her my data. So instead I took their data and their stats, and I went right through a Toronto Real Estate Board's report and showed her in black and white how she can read the report and debunk everything that she just published the previous week because she believed what the Toronto Real Estate Board said. She's sitting here with me agreeing with what I'm saying is true, and then the next week I get an email, I'm retiring. The new reporter, Tess Kalinowski or something like that, who's going to take over, I've left her your name for you to be able to start this story with her. Guess what? Not a call. Here we are, 5 years later, and yesterday, Tess Kalinowski, headline reads, the average resale price. Well, no real estate board in Canada produces a resale price, and as we said before, CMHC changed their charts a couple of years back. Well, guess what happened in December, folks? The Canadian Real Estate Board dropped the word resale. The Toronto Real Estate Board dropped the word resale yesterday. And the Ontario Real Estate Association's report does not have the word resale in it. What it says is, based on residential data from the MLS systems of real estate boards and associations in Ontario. In other words, we don't have the data. We are provide stats from the real estate boards. So if there's any mistakes, blame the real estate board. Okay. What do the real estate boards say? What do the real estate agents say at the real estate board? Oh, it's real estate stats from our real estate board. If there's any mistakes, don't blame us, the real estate agents. Blame our real estate board. What does OREA say? OREA says, we don't get the real estate stats. Korea does. If there's anybody to blame Korea. So the real estate agent blames their broker. The broker blames the real estate board. The real estate board blames the provincial real estate board. The provincial real estate board blames the Canadian Real Estate Board, Real Estate Association. So all this blame is written in there in black and white in the footnotes, yet everybody believes that they're telling the truth. In December of 2020, organized real estate across Canada changed their wording, their wordsmithing, and they now use the term MLS average price. Any of your listeners can go to the Canadian Real Estate Association's Twitter feed, and you can go back and check all of the reports that were done prior to December. And you will not see the word MLS average price, MLS sales. That all appeared magically in December in the setup for 2021. After doing all the damage they did during a pandemic lockdown, they set you up once again so they can wipe their hands and put them up in the air. Oh, that's not what we said. You can't blame the Canadian Real Estate Association. You can't blame the British Columbia Real Estate Association or the Ontario Real Estate Association. You can't blame the Greater Vancouver Real Estate Association. You can't blame the Toronto Real Estate Board. You can't blame your local broker. You can't blame your local realtor because we changed the word. We used the wordsmithing that we perfected decades ago and that the press has eaten up for decades. And the press is now caught. I'm looking at a report here, Jim. Understand what this listener is saying. And the financial advisor, who clearly does not subscribe to our services, is giving them information about. The average price in Ontario supposedly increased $170,000 year over year in January. 26.7%. Wow, that's amazing, Ross. I mean, that's just amazing. Imagine the wealth. There's, let's say there's 4 million homes in Ontario, and the average home is now worth $170,000 more. Get your calculator out, folks. This is what they're telling you. This is what you believe, and this is how they're convincing you to go out and buy another home tomorrow. Now, I want you to, at the same time, ask yourself, wait a second here. The Toronto Real Estate Board reported that the Greater Toronto Area, as Tess Kalinowski at the Toronto Star reported, the average resale price in the GTA increased 15.5%. Wow, wait a second. The average price of the most expensive homes in Ontario only increased, supposedly, $130,000, but the average price of all the homes in Ontario jumped $170,000. You really cannot make this stuff up, folks. You are watching in real time, as we told you before on other shows, the debunking of decades of Greg Klump and the Canadian Real Estate Association commission propaganda machine. You are seeing it debunked in real time. There is no explanation anywhere in this report from the headlined with the Ontario Real Estate Association logo under the Ontario Real Estate Association Housing Market Update for January 2021. Star, asterisk. We always got to make sure we have those stars and asterisks in there because that way we can lie and we don't get blamed for it. How did that happen? The GTA, which is the biggest housing market in Canada, commanding an area from Oshawa all the way around the Golden Horseshoe, right up to Burlington. Burlington really isn't included in the GTA, by the way, folks. It's in the Greater Hamilton area. But let's include it in this argument. Their prices, the average house only went up $130,000. But Oria's saying the average house in Ontario jumped $170,000. Shaking your head. Look, folks, we can't stop house price illusion from happening, but we can measure it. That means we measure the amount of risk that someone is taking when they're buying a home. It's a dollars number. We don't use percentages, as I've said on the show before. We use hard data. We measure housing bubbles. If you're buying a house, we know how much room there's in a house to correct. Yes, you believe that house is worth $1 million. You really, truly believe it. The listing real estate agent believes it. The buyer's real estate agent can't believe it, but yeah, he believes it, or she believes it. The real estate boards believe it. The banks believe it. They'll lend you money based on the opinion you have. They're going to lend you money based on your beliefs. If you believe a house is $1 million and your real estate broker agrees with you and the listing broker agrees with you, the bank will agree with you. They will lend you the money. They will create money out of thin air. Whatever your random opinion is, they will give it to you. Even though nobody can prove houses' prices change in 31 days, if your opinion is they'll change, they'll believe you. And they'll let you leverage up to 90% of your opinion. If you believe a house is worth $100,000 more, your opinion is, hey, I think this house is worth $100,000 more. They will lend you an extra $90,000 based on your opinion. If that house really is only worth $50,000 more, that means there's $40,000 of house price illusion that was financed. If the appraisal came back, if a hardcore appraisal came back that said, wait a second, I know the buyer's opinion and the real estate agents all say this house is worth $100,000 more. But based on comparables, we can only find 50. And the bank says, well, don't worry, we've got two real estate, it's close enough. You know what they say, house prices have gone up 15% in Toronto. This is a 15% more. We'll finance it. The deal's done. So imagine this poor listener. Imagine this poor listener. Imagine the poor families in Ontario. The average home buyer in January in Ontario spent almost $800,000. That home buyer will be carrying a mortgage of somewhere around $460,000. Over the next 25 years, their family will be paying that mortgage off. And anytime the interest rate rises, which inevitably they are going to, because when a housing bubble pops, interest rates go up. It's got nothing to do with the bonds, the way that you're explained to it by these housing analysts. What happens is that the rating agencies panic. They downgrade the credit rating of Canada when housing prices are just remaining level, not just dropping. And the result of that is the Bank of Canada has to raise the rates. The opinion of a rating industry that is based on the opinion of home buyers determines what the Bank of Canada will do. So, Esther, I'm sorry. Condo prices and home prices have gone up over the last 2 years in terms of house price inflation. The actual cost of that home has not gone up. The actual appraised value of that home on a properly done appraisal has not gone up. The banks will lend you money based on your opinion as long as your real estate broker and the listing real estate broker agrees with you. The bank will lend you money. That doesn't mean when all this damage is done, that you're not going to be the one left holding the bag. Because remember, organized real estate has built it this way. You can't blame the real estate agent. You can't blame the real estate broker. You can't blame the local real estate board, or you can't blame the provincial real estate body, and you can't blame the Canadian Real Estate Association. You are the only one that gets blamed. They have carefully put asterisks, wordsmithing, and deception to their advantage. And believe me, folks, based on the data from January, you have not been told anything that resembles the truth. You have been manipulated to such a degree that it has now surpassed the spring of 2017 in Ontario and even surpassed the spring of 2016 in British Columbia.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Ross Kay. Ross, yesterday the Toronto Star's headline included the specific term average resale price. In the past, you've commented on this. And John in Toronto asked, a real estate reporter for the Star had a headline that read average resale price of GTA homes to pass $1 million for the first time. Why are they still calling it resale after CMHC removed the term on your advice?
Well, because they have reporters, they don't have journalists, Jim. And I mean, the irony, I just discussed this in the last section. The reporter who took over for Susan Pegg at the Toronto Star is Tess Kalinowski. Who does Tess Kalinowski listen to in her reports? She listens to real estate brokers who don't even sell houses. She listens to real estate brokers who would rather be on television, who sell so few homes, they can risk their brokerage license by going in the news outlets and talking about housing market. You don't see a successful real estate broker anywhere in Canada, a broker owner anywhere in Canada, going on national television and talking about the housing market. That you may see a successful real estate broker talk in vague terms about a housing market, but you will not see a successful real estate broker going in and talking specifics. The unsuccessful real estate brokers are those that don't sell many homes in a year, if any. If they own a brokerage, their brokerage average sales per agent is below what even a median successful real estate broker would be producing. They're just not making enough money, even with commissions at the ridiculous levels that they are, where you only have to sell 3 houses to make more than median income. They're not doing that. That's why they appear in these news reports. When that headline came out yesterday at the Toronto Star, the average resale price, I just flashed back to Susan Pegg, and I flashed back to the Toronto Star real estate section. A short 10 years ago, the real estate section of the newspapers were a huge profit center from your local print media. There also used to be little magazines that you'd find around, Homes and Land, the Real Estate Book, all of these little publications. Yellow Pages, ironically, used to publish one that before they bought Comfrey. They bought Comfrey, and the real estate agents in the rest of Canada kept putting their ads in the real estate book that the Yellow Pages was publishing. It was hilarious. You have a for sale by owner company attacking your business livelihood, and you're giving the company that owns the for sale by owner company advertising dollars every month. You just can't make this stuff up. The average resale price that appeared in the headline yesterday, said that the average resale price of GTA is to pass $1 million for the first time. And we're sitting here and we're shaking our head and we're asking, what are you talking about? The average home buyer who purchased a home through an MLS system in 2020 in the GTA was already over $1 million. You're forecasting that at the end of the year, the average price in the GTA is going to be over $1 million when it already is. The Toronto Real Estate Board does not report all homes that sold in the GTA. There's a huge variance just within, a couple of miles, 20 miles from Toronto. You've got the Oakville Real Estate Association, which is actually part of the GTA, and who previously shared a working relation. Well, I guess they still have a working relationship with the Toronto Real Estate Board. They published an average selling price last year that was like $200,000 higher than what the Toronto Real Estate Board reported for the city of Oakville. Okay, they also reported a different sales count for the city of Oakville than what the Toronto Real Estate Board reported. Okay, they also reported a different sales count and a different price for the city of Milton and Halton Hills that the Toronto Real Estate Board reported. The city of Burlington reported a totally different average selling price with the Real Estate Board, Real Estate Board of Burlington than the Toronto Real Estate Board supposedly reported for Burlington. If you simply take those numbers and you drill it down to single sales counts for the Greater Toronto area only, you're already over $1 million. So what they're basically saying is, housing prices are actually going to drop next year, but we're going to pretend it's an increase. Typical organized real estate. The Toronto Real Estate Board also made a historic change to the reports yesterday. A historic change. Something that they had never done before in their history. They admitted they don't count the GTA. Yet not one news reporter, not one broker that was on TV, not one housing analyst that was on TV mentioned it. Even though the words are right there in the report. Combined home sales reported through TREB's MLS system for the GTA, South Simcoe County, and Orangeville are expected to reach 105,000. That's right, folks. They're admitting how they got their so-called record last year. They're counting a bigger area than just the GTA. But now that the December change and the pandemic and the fear of organized real estate for being exposed for the frauds that they are is so overwhelming, they've changed all the reports for 2021. And now what are you talking about? No. We weren't talking about the GTA. We were talking about the GTA, South Simcoe County, and Orangeville. No. We weren't talking about the GTA average resale price. We were talking about TREB's MLS system for the GTA price. In other words, if those sales that were reported at the Oakville Milton District Real Estate Board are reported at our real estate board, all of a sudden we're already over $1 million. What? This is the best scam that we can run. House prices can actually drop in 2021, and we can claim that they rose by wordsmithing. Evan Siddall at CMHC doesn't have a clue with what's going on. He shakes his head. I'm sure they're pulling their hair out there. How is the Ontario house price up $170,000 in the last year when we said housing prices were going to drop 9 to 18% nationally? Well, it's MLS stats, Evan. You just don't know how to read the stats. You've decided that you're going to ignore the stats. Or is it that for the last 40 years, well, I'm going to say since 92 when we hired Klump, you believed Klump and you didn't ever think to get proof, because that's what we're sitting at here. This question goes straight back to yesterday's report. The average price of an MLS system, a home sold on the MLS system within the GTA during 2020 averaged over $1 million already. The Toronto Real Estate Board did not say average resale price in their report. They changed their wording to TREB's MLS system price. Now, everybody says, well, Ross, what does this matter? Ross, you're picking and choosing. The truth is, Ross, we're going out there, we're looking at houses, and we're seeing those prices. Yes, I understand that you're seeing those prices. That doesn't mean it's not a result of a fraud. It doesn't mean that the MLS house price pyramid scheme is not believed to actually be measuring house prices when it's not. What this listener is confused about is that they know this can't be true. They know it's impossible that the average price of a house in Ontario increased $170,000 in 1 year during a pandemic lockdown when we had record unemployment in this province. People who can't even make their rent. Deferred mortgages. Car dealers with cars that they couldn't sell. Restaurants closing up shop. Unemployment increasing. They can't understand it. Well, guess what, folks? It's magic math. Every single thing that I read in the newspaper yesterday, we could debunk in one way or another. It gets to a point where it's physically exhausting, Jim. And what makes it worse to us, what makes it worse, are the people that actually hold a license to trade real estate in this country. The people who are realtors, real estate agents, real estate brokers, who are going out there and speaking about something they have no knowledge to speak on. They're going out there and telling you, letting you believe that it's the average resale price, even though their own trade association, board of directors, changed it to protect the nonprofit status of the board. They didn't go tell all their members, okay? The people that you hear in the paper, they weren't told that this change took place, because that's not how organized real estate works. If we didn't have our insider connections, I would not have known this was going on. I would have known it after the fact when I read it this starting December, but I wouldn't have known in advance that it was going to happen. It's only through our connections that we're able to have these answers. So, CMHC was wrong because they didn't understand how house prices increase when the share of sales to first-time buyers gradually begins to decrease. They were wrong because they don't know how the trading pattern happens at the last stages of a trading cycle, which means wealthy buyers move from more expensive neighborhoods out into the suburbs, for the sake of the argument. It normally takes 4 sales to make a $700,000 house sell in a local community. Only takes the one $700,000 sale, and it skews the average price upwards. They don't know that the Canadian Real Estate Association doesn't count resale or existing homes. They don't change the numbers in each municipality depending upon the impact of brand new homes being built. We can't change house price illusion, folks. We measure it and we know where it's going to go, and we have to give people advice based on our knowledge of that space. I listened to a show yesterday on the Weekend, a podcast from an insolvency firm here in Toronto. An insolvency firm who has a tremendous amount of experience in the field that they're talking about. As a matter of fact, this firm had so much experience, Jim, that one of the owners of the company I recommended goes on BNN. So the first time he appeared on BNN was after I had recommended to Greg Bonnell that he goes on. He made arrangements. He went on the show. He's been a regular guest on the show since. Well, he had a real estate broker on his show, his podcast. And I'm listening to this, I'm thinking, this is an outright lie. This real estate broker is simply regurgitating what he learned from the real estate board. He hasn't sold enough homes to understand what he learned was a lie, and he's out there giving this advice. He's giving, oh yeah, this is really what's happening. Oh yeah, this is the reason why. Why is there no new housing metric in Canada since 2002, folks? Why is there not one single housing metric released new this month from anybody in Canada? Why? They all existed before 2002, when it was illegal to do anything but get a seller the highest price possible. Why are these people going out there speaking about things that are going to cost families for the next 25 years? I'll tell you this, Jim, before we leave this topic. When you sit at a kitchen table with a family, I'm going to sound chauvinistic here, because when it happened to me, these were the circumstances where it happened. Where a husband is crying, a father is crying, because he listened to a real estate agent, and now he's entering foreclosure. The family's going to lose their home. You were never the same after that. Your integrity as a real estate professional, as a salesperson, I would hope, as it did for us, went to a new level. The precision that you talked about thing was always to ensure that your client was never confused, that they knew fully well what they were getting themselves into. If you believe anything that you read in the paper today, this week, the last year, the last 5 years, you've been lied to, you've been deceived, you've been misrepresented. In order to speak this way, you have to give up your license to trade in real estate. Because in order to speak this way, to be critical of organized real estate, you're breaking the realtor code of ethics. And if you're an ethical person, you're simply not going to do that, no matter the circumstance.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, affordability is making headlines again as Canadian banks' affordability calculations are being cited as improving while house prices rise. Well, Kaylee in Vancouver asks, I keep reading about home prices rising and also hearing that affordability is improving. How can we be seeing both things at the same time like the banks claim?
Well, because you're listening to what we call economists, not myths, myths. We call economists economists. And we call them that anytime they cross over into the housing space. The second that an economist begins to talk about housing market, home ownership, affordability, we call them myths because they don't know what they're talking about. They believe in house price illusion. They believe that a house price is going to go up in 31 days. They believe the Ontario price went up to $170,000. The average resale home in Ontario increased $170,000 over the last 12 months. They believe that. They really, truly believe that. They believe a myth. Affordability. If you look at every single affordability calculator that they do, the affordability calculator doesn't apply to those where affordability matters. First of all, they're always measuring the wrong home. Think about it. If you have 100% of families in Canada and 70% of them own homes, choose home ownership, and 30% choose tenancy to rent, that means the bottom 30% of homes are going to be occupied by tenants, or they're going to be underutilized. In other words, the tenant is paying less for that property to rent than they would to own it. Now, what that generally means, Jim, is that the tenancy was entered into on an original purchase price years behind created. In other words, if you have 100% house price illusion over a period of time, but you bought the property before that illusion took place, and you're renting it out today based on the price that you paid for it, or plus a little bit more for the sake of the argument, everybody's a winner. The tenant's a winner because they couldn't go and buy the house for this amount of money, and the landlord's the winner because he's paying down their mortgage quicker than they thought they would on the day that they bought it. So you've got that 30% already that you don't talk about. So the income levels of that 30%, you shouldn't be part of the affordability discussion because that part of the affordability discussion needs to look at the tenancy market. That means you can't use the false metrics that the CMHC uses or urban analytics or all of these, rental DoorDash, whatever, all the reports that came out. Because what they only measure are new tenants. That means for around 28% of that 28%, in other words, almost 100% of those renters, of that 30% that rent, their rents only go up with inflation year over year. There are places where rent controls aren't in place, and the rental housing stock allows a higher rental increase to happen, but I'm just going to downplay that portion. The top 70%, okay, are homeowners. Well, we need to look at the top 70% of incomes, because if you're not in the top 70% of incomes, you shouldn't assume that you're going to be able to afford a home. Own a home. You should be able to afford housing. You should be able to afford a nice rental, but you're not going to be able to pick and choose where you want to live. If you can't afford in Vancouver, then you should expect to move out to Langley. That's just what you should expect to do. I'm not here to pass judgment on that. I'm just telling you what what reality is. I can't change reality. I can't change the fact that every reader of the Toronto Star last week believes the average house price in the GTA is going to go up to $1 million, and that they don't know that the average home buyer in the GTA was already spending $1 million last year, on average, the entire year. I can't do anything about that. I can only counsel people and give them advice of what's going to happen. If you're going to spend $600, $800, $1 million, $2 million, $3 million on a house, only thing you really need to know is how much money are you risking? Okay, if I buy this house for $1 million, Ross, how long am I going to have to own it if there's a tremendous housing crash happen before I can break even again? And we can do those numbers for you. We can give you the length of time you're going to probably have to own the home to break even. Now, if we're out a couple of years, for us, it really doesn't matter, because we're talking about such a huge amount of money. A small percent of house price inflation can make our calculations way underrated. We win every single time. You change your paperwork when you're buying your home. You're going to save tens of thousands of dollars over the first 25 years of your ownership. Okay, well, you've got that built-in safety valve there. The banks believe realtors because Greg Klump went to the same universities, the same schools, the same economic councils, the same committees. He attended all the same groups of all the other economists across Canada. They're buddies, elbow buddies. Okay? That's who they are. The new ones that came aboard in the meantime, they just got bought into the system. They bought into the beliefs. They bought into it. Can't do anything about it. They believe that the opinion of a random home buyer and their real estate agent and the listing real estate agent determines what a house is worth. They really believe that. Okay. Can't do anything about it. Affordability is a personal thing, because you should not buy a home if you cannot afford to own that home. None of these banks do a proper affordability. In other words, can you really afford to buy that home? No bank does that. Why? Well, because they're going to book less mortgages. Their banks are going to earn less profit. There's not a single affordability calculator out there who calculates what it actually costs to own a home. Never have been. It's hard, even for a regular consumer, to find out what the durability of each component of their house actually is. So we have a whole software program, Jim, where we took research done by other firms, generally in the United States of America. We cross-referenced it with the different government data sources that we use. People don't understand. It's not just CMHC that covers housing in Canada, folks. There's a lot of other government agencies that also cover housing. Just no one's aware of them. And we aggregated all that information, so we're able to plug in what it's going to cost you just from your roof alone. You can't get that anywhere else because no one wants to give it to you. Because when you hear the truth, often you're going to make a different decision, which is going to cost the stakeholder money. The reason why you hear house prices are rising and affordability is improving, you have to think who is the source? Well, if the source is a bank, how does a bank earn its profits? It earns its profits by lending you the most amount of money that it can. If anyone believes that a bank is going to turn their nose up at ripping you off for an extra $2,000 a year, you're nuts. I've watched it happen for 40 years. I know how the banks work. They will manipulate you to squeeze every last penny of your paycheck and to put it into their bank's profit. So their CEOs can get millions and millions of dollars of bonuses because they raised their profit margins in their bank during a pandemic lockdown. They have no problem taking money from wherever they can, and they have no problem putting any spin on any stats. It's very possible that economists are not as stupid as I believe them to be. It's very possible that they really suspect Greg Klump didn't tell them the truth for the last 30 years. It's very possible that it really doesn't make a lot of sense. That doesn't mean that works in the best interest of their employer, the bank, or the real estate broker, or the real estate franchising company. I mean, one of the biggest frauds in Canada is that Royal LePage is a real estate company. Royal LePage has never been a real estate company except for the first office that it opened. A.E. LePage opened, okay? Royal LePage is not a real estate company. It's a real estate brand franchiser. Nothing to do with real estate. That's why it gets to produce reports which the provincial regulators can't charge them for issuing false, misleading, and deceptive advertising. It's why their real estate brokers who license the real estate name Royal LePage point to Royal LePage, the franchise, and say, oh, we got these materials from them. We didn't create them. Blame it on them. I think that goes back to the other one. They want to hand off blame to everybody else. But in the end, on affordability, home prices, your life, the only person that is going to ever pay a price is you. These people are not running businesses that are designed to protect you. If you pay for advice, whether it's investing in the stock market or it's investing in real estate, if you pay for advice, that advice has to be legally only focused on you. If you want to accept free advice or advice that is where the agent is getting a commission, real estate agent, mortgage broker, a bank advisor who's employed by the bank, none of those people are under a legal obligation to work in your best interest. That's why affordability is supposedly improving with a $170,000 increase in the average resale price of a home in Ontario. Yeah, folks, that's what they want you to believe.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay. His website, thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.